Ready for this? MK, Peter, hello, how's it going? And Ryan, how's it going there, Ryan? Atlas, okay, and we are ready. Here we go. Hey, everyone, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow using nothing but pre-qualified dividend stocks, and those are companies that have consistently increased their dividends to their shareholders for a minimum of 20 consecutive years. What does that mean? Year after year after year, they higher and higher and higher dividends. Mikey G, Jennifer, Jen, I haven't seen or heard from you in a while. Simba, how are you doing? Good to see you too. So that being said, weekly cash flow, safe, predictable, consistent, 1% per week. Take you guys along for the ride. Hi, Jen. Haven't heard from you in a while. All right, that being said, let's roll. Let's get into it. We have a whole bunch of stocks that we didn't go through last night. Where are we? We're right here. So we gotta go all the way down here and then all the way down here and then whatever else you guys do. Disney, Joe, we looked at Disney yesterday. Doc, they're all over the place. Daisy, you want to take a look at Disney yet again? We did look at Disney yesterday, but I got no problem looking at it again. Okay, so first one on our list today is Lennar. Lennar. All right, Lennar. L-E-N. Lennar. Now, for those of you guys that are new here, don't quite understand what we're doing. What is this? We're only 11 people here on TikTok? You've got to be kidding me. Do I have to reboot that thing? Wow. Unless something's going on. 13. All right. More likes can attract more viewers. Keep it up. You got to be kidding me. 16. We had like 200 or 300 last night. All right. Well, it's Juneteenth. Maybe everybody's still celebrating. Who knows? Who knows? All right. Mark, how's it going there, Mark? Well, let's get the ball rolling. We're going to take a look at Lennar first, only because we're here. We're going to get started, and why not? People will show up when they show up. It's all good. User 1922 249 495. Yeah, whatever. How's it going? Good evening. Yes, it is a wonderful evening. We're just getting started. We're starting out with Lennar, L-E-N. First thing, always, 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 I want to look for is what can I buy it for first thing tomorrow morning? 149.19. The 149 is going for 265. Can you believe that? 265. What's BOFA? Anybody know what BOFA is? BOFA. I have no idea what that is. Close enough. Don't waste time on the numbers. Trader Troy. Howdy, James and all. Bank of America. That's B. Isn't that BAC? Isn't BAC? Yeah, BAC's Bank of America. BAC. All right. Both of these nuts. That's funny. All right. So we are looking at over 1% if we do at the current market price, 149.19. The 149 is going for 265. Nice. I like that number. However, let's take a look at this. I don't like this right here. Okay. We're going to take a close look at that. But look where we are. Here's the high. Here's the low. Here's where it was. Here's where it is. And it's going to the upside. Very easy to see. Very easy to isolate that. So what does that look like? A year ago, 121.66. The low of the year, 103.05. All right. Topped out at a double top at 172.34, and that was the beginning of April. Okay, so from the high of the year, let's take a look. Here's the high. Here's the low. Whoa. Tuesday was the low. This was the previous low here. She shot up, pulled back down. Well, you know what that means. Okay, high here, low here, high, down, up, down, up, down. I like the movements. Looks good. AMGN. All right, see, Skyworks, you actually give me the ticker symbol. The name doesn't do me any good, especially when I've never heard of them. So basically, if I've never heard of them, what do you think that's going to mean? Amgen, AMGN. Yeah, that's probably going to be a no also. Doc, you're all over the place. All right, so Lennar, the last 30 days for Lennar. Why do I want to look at the last 30 days? Well, the last 30 days gives me a kind of an idea where it's going to go. DKS. What is DKS? Anybody know what DKS is? Okay. The more I connect, the more engagement you get. Yep, Doc, you're absolutely right. Jen, what is DKS? Seriously. Okay, I have no idea what DKS is. Jen, you've been here long enough not to give me something I don't know. Something that has 20 years of increased dividends and weekly options. Jen. All right, so let's take a look at the last 30 days and tell me what you think is going to happen. Well, here's our 30-day high 30 days ago, 166. She drops down to 152, retraces back up to 161, drops back down to 152, shoots back up to 161 again, and then pulls down to here, 148.72. That is the low of the 30-day period. You want to buy low, sell high? Well, here you go. You're not going to get any lower than the low of the 30-day period with Lennar. Well, great. Well, that's that. More than likely, okay, more than likely, and this is not definite, but more than likely, look at, she gaps down. So what do you think is going to happen? Well, she's going to fill that gap up. Kind of filled it up. She breached 154 yesterday. Okay, so what are we going to do? What stock is that? That's Lennar, L-E-N. Big O Monkey. Big O Monkey. SWKS. SWKS. All right, see, I have no idea what SWKS is. I know SWK, but not SWKS. We'll take a gander, okay? All right, so what do we think? What does Lennar usually do this time of year? Well, this time of year, Lennar usually, let's pull up seasonality. Okay, now that's a steady growth. For those of you just getting started, Bigfoot, Walgreens has done terrible last 6 months. Yeah, Bigfoot. When is the best time to buy something? When it's at the absolute bottom. JPM, JP Morgan. JPM. Mama, how are you doing? Okay, so Bigfoot, think about it. If you're going to make money in the stock market, when's the best time to buy? Well, the best times to buy is at the low. Walgreens has been in business for over 100 years. Well, are they on the verge of bankruptcy? If they have, I haven't heard it. And companies that are going bankrupt usually don't. Yeah, exactly. It's at the bottom. Now, we're going to take a look at Walgreens in a little bit. It's been slowly going down and finally found its bottom a couple of weeks ago. So you cannot get any lower than the bottom. Right now, we're looking at Lennar, and Lennar is at the bottom at this 30-day period. So let's take a look at Lennar. We'll get to Walgreens in a little bit. But right now, we're showing the seasonality chart. Now, for those of you who don't know what a seasonality chart is, it's 10 years worth of data. Okay, the blue line represents the movement for this year. This is what it's done this year. Okay, now that red line represents 10 years worth of data. That's 2014, 2015, 2016, 2017, 2018. Hey, Macarena, whatever. Okay, James, have you an option question? Okay, I have a question. If your stock choice gets close to the exercise, do you close your cover? All right, user 1922. Let me get to that in 1 second. Let's finish up with Lennar first, and then I'm going to address that question because it's a good question. All right, so here's where we are right now. This blue dot, this represents today. Okay, I want to take a look at the 10-year chart based on the next 2 weeks. Where do we think it's going to go for the next 2 weeks? Basically sideways. No big up, no big down. Great. I love when it goes sideways, and I really hate saying the word sideways when it comes to stocks, because stocks don't go sideways. They go up, they go down, they go up, they go down. So 30 days go down, up, down, up, down. Where do you think it's going next? All they do. All right, C, Skyworks Solutions. You really got to give me the ticker symbol because I don't know that company off the top of my head. And usually, if I don't know the company off the top of my head, it won't work in this situation. Okay, Robert, Trump 24 or the US dollar will lose 98% of its value. Okay, Robert, I'm not 100% sure about if you know this or not, but the Saudis walked away from the US dollar, so they are now accepting any type of currency to buy the oil back in the 70s. Kissinger went around and said, hey, you want to buy oil from the Saudis, you got to use the petrodollar. The petrodollar is officially gone from OPEC. So that's going to affect some shit real bad. Who knows what's going to happen? That is Skyworks. Yeah, I need Sky. What? SWKS. Okay, Skyworks. I'll take a look at Skyworks. Brick B all way. If Walgreens didn't own Serona Medical stock, they would have been bankrupt last year. Well, alrighty. Now Walgreens has been in business for over 100 years. Okay. We, the old generation, that's Gen X, Gen baby boomers, and the silent generation, whatever's left of them. Yeah, we have medication coming out the yin yang. Where are we going to get it? CVS, Walgreens, Walmart. Wait a minute, we are in big trouble if they cheat us again. Yep, let's not get into politics, dude. Seriously, I do not want to go down that rabbit hole. What are the effects of the petrodollar ending going to be? Yeah, that's a good question. What are they? Okay, now if you want to get into a political discussion, yeah, we can do that privately. I got a lot to say about politics, but not here. Okay, one thing I don't do here, I don't do anything except for talking about dividend stocks and increasing stock prices and increasing, what do you call it, dividend payments, and getting a safe, predictable, consistent 1% per week. That's my main. So Amazon, I missed that question. Amazon is also delivering prescriptions. Well, cool. What's your opinion about SoFi and FOBU? How about no and no? But I'll take a look at them, and I'll tell you why they're a no and a no. SoFi and BOFU, a FUBO, F-U-B-O. But as you see, I have all these stocks here to look at, and all these, and yours is right down here at the bottom of the list. So we will get to it. When I get to it, it probably might not be tonight. If you buy and the price falls, do you sell the same strike price the following week? User 7462, it's going to be all about the numbers. We're going to talk about that in a little bit because I had another question. So nothing about the petrodollar. How about Intel? Ooh, Rambo Bambo. I like Intel, INTC. No, TikTok, no, I don't do commodities, okay? Don't do commodities, and I don't do Forex, and I don't do crypto. The only thing I do here is dividend stocks and quality dividend stocks. Those companies have increased for more than 20 years. Dividend kings, dividend aristocrats, dividend champions, dividend contenders, Warren Buffett's list. Those 5 lists right there will give you over 300 companies to look for. Over 300. That's more than enough to satisfy my needs. Okay, if you guys want to add more to it, to your own personal list, I think it's a great idea. Okay, and I actually insist you guys do your own research. Find out what works for you, because what works for me may not work for you. Okay, can you please tell us more about Intel? Rambo Bambo, we are going to get into Intel, but let me take a look. Intel. All right. Unfortunately, Intel, okay, is at the bottom of the list. There are hundreds of other people that were here before you. So as I go down the list, I will get to Intel. I made a big score on Broadcom, bought 1,500, and it's running big. Okay, great. I love these, especially the option stocks. It's hard to get elsewhere. All right, 1922, we're going to take a look at it. All right, so somebody asked a question about positions. Well, here you go. If I like, and I do like Lennar. However, Lennar is at the 30-day bottom at this moment in time. So if I was going to buy it tomorrow morning, which I'm not going to, the right edge of your monitor isn't in the picture. The right edge of my monitor. The right edge of my monitor. Here we go. How's that? There we go. Right edge of my monitor is on the picture. This one, right. Whoops. That one right there. That one, that one, that one. All right. So I got 5 cameras going at once. All right. Thank you. No problem. All right. So as I was saying, Lennar is at a 30-day bottom. Now, I love a 30-day bottom. And as a matter of fact, I'm going to write Lennar down for next week. Now, here's the reason why. Okay, now you got a 30-day top and you have a 30-day bottom. What usually happens at a 30-day bottom? Well, as soon as they find the bottom. Now, how do you find the bottom? Well, my opinion is once you find the bottom, 2 days to the upside says, hey, this is the bottom right here. Okay, now we're going to take a better look at that when we see something like Walgreens because it really isolates it. Deaf Samurai. Hey man, do you teach a random person for free ever? No. How about Micron? MU. We'll take a look at MU. So to answer your question, Deaf Samurai, this is where I do my teaching. You ask questions, I answer it here. Now, I do have one-on-one, totally different story than this. Okay, we also have a live trading group every morning, Monday, Tuesday, Wednesday, Thursday, Friday at 3 o'clock, just before the market closes. So we make sure that all our positions we jump into on Monday and Tuesday. Okay, Jen, blah, 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 but going up since they announced the earnings on the 26th. Thanks, Jen. I like it when you guys answer the questions for me. So my take on Lennar. I like Lennar. However, I want to keep my eye on it to see when it turns around because it's going to continue going down until we, you and me, we are the buyers, we are the investors. We say that's too cheap. I want to jump in and I want to buy. Okay. Okay, Deaf Samurai, it's $100 a month. Okay, Monday, Tuesday, Wednesday, Thursday, 9 a.m. until you guys run out of questions. And Friday, it's 3 p.m. until you guys run out of questions. I stay online until you guys run out of questions. It's really that simple. Okay, you guys get to watch as I do my own personal trading. Now, all my trades are available online, so you can see every single trade I've done. I also do a live podcast while I'm trading. So as I'm trading, I'm also recording my trades so you guys can see them. Why am I doing it? Well, this is really cool. You ready for this? I am creating an investment company in about a year or two. So in order to do that, I need to have a track record, a verifiable track record. So the track record is available online. You can see every single trade I've done for the past year. I started in January. So I'm thinking between the next 2 years, and then I'll apply for the, what do you call it, from the SEC to get the approval of whatnot. It really does well worth it if you're investing this way. Yeah, okay. How much lost do you have per trade? Okay, Deaf Samurai. I've had one loss so far this year. Okay. Do you trade NVIDIA? Nope. Now, the reason why I don't trade NVIDIA, we had this discussion last night. Do you have a course, Rambo Bambo? Yes, I do. Now, the reason why I don't do NVIDIA, everybody's talking about it. NVIDIA, it's just for the fun of it. Let's look at this. NVDA. All right. Take a look at the chart on NVIDIA. It's at 135. Now, if you're going to buy at the high and expecting it to go higher, well, good, fine, Danny, good for you. Nope, not me. I like consistency, predictability, and safety. Okay, I never, ever, 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 ever buy at the high. Because what's going to happen? Do you see down here, 40 bucks? Okay, it wasn't 40 bucks. Last week it was what? The high was 1,200 and the low was 250. It went from 250 to 1,200 bucks. Yeah, great, fine, dandy. How often does that happen? Maybe once every 5 or 10 years. Couldn't you go long on a put then? Yeah, Corey, I don't do puts. What about GPN? Never heard of them. Buy low, sell high. Copies and pasties, exactly right. You trade oil and money currencies? Yeah, no. What stock is that? That's NVIDIA. Right. Let's get back to what we're talking about. Another reason why I do not like NVIDIA. 135 is the stock price. Do you guys have any idea at all what the book value is on NVIDIA? What about Dell? Now, we covered Dell last night, but I'll put it down again. We probably won't get to it tonight. We'll probably end up getting to Dell tomorrow night. All right, sorry, because there's so many. If you were to pick one stock to invest in, what stock would that be? That's a good question. Do you trade options? Yes, I do trade options. What does book value mean? Ooh, Plantier. We looked at Plantier last night. It has no dividends, so it's no. Corning, another good one. Corning. ARM. Never heard of ARM. Corning. What is Corning? Anyone know the Meta? No, Meta doesn't have dividends. Well, actually they do, but they don't have 20 years of increased dividends. So Meta is a no. GLW. LMT, Lockheed Martin. Good. NIO, that's a no. They don't have, I don't think they have dividends, or they're monthlies, one or the other. Never heard of ARM. Yeah, what the heck is ARM? ARM. ARM Holdings. Yeah, it's going to be a no. Take a look at it. ARM 174. It's at the high of the year. If you really think it's going to go up higher, good for you. No, I buy at the low. Look, I buy at the low. It goes up, it goes down. It goes up, it goes down. It goes up, it goes down. I like to buy it after it goes down. Makes a turn and goes to the upside. Okay, Fox Buddy, Altria, MO. We'll take a gander at it. James, is it any harder to trade in high volatility in the past few years, or just more expensive? 1922. You should look at GPN. 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 Now, Andy. Oh, what aristocrats you like? I like them all. It's an interesting question. Okay, Ong Crispy. GPN. Now, GPN I've never heard of. Okay, Wolf, never heard of that either. GPN. Global Payments. Yeah, no. Why is it a no? It's a monthly. What does that mean? That means they have options only every month, which means I can trade it 12 times a year. Why would I want to do it 12 times a year? I can almost guarantee they're not going to give me anything. Look at the 93, the closer one's the 95, it's $1.95. Good, that's 2%. Great, 2%. I've got to hold it for 5 weeks. So that 2% for 5 weeks comes to less than 0.5% per week. Why would I want to do 0.5% per week if I could do 1% per week using a weekly? So anytime you have something come up with a monthly, it's automatic no. For me, if you want to do it, hey, perfectly fine. But I don't do monthlies. So GPN is a no. AVGO, isn't that like way AVGO? Yeah, you're nuts with AVGO. Okay. I don't do stocks over 250 bucks. BDX. BDX. No. Okay. Another monthly. Bristol Myers Squibb. I like Bristol Myers Squibb. BMY. Okay. BMY. This is what I like to look for. I like to look at companies that have weekly options. Why weekly options? Well, weekly options allows me to do this trade every single week. If I'm buying it for $40.88, that's 41 bucks. Okay, Rambo Bambo, PLTR is a no. Okay, so if I'm buying it for $40.88, I can sell the 41s for 65 cents. That's 1.5% for the week. ADN, never heard of them. ADN, never heard of ADN. Simone, how are you doing today? Yes, I have 50 AVGO shares. It's been on fire. Yeah, well, good for you. I'm happy for you. $1,800 a share doesn't work for me. Do you know why it doesn't work for me? Let me ask you a question. Bristol Myers Squibb has been in business for over 100 years, okay? Their stock price is $40.88. Now, from $40.88, how far is a drop from $40.88, which is about 41 bucks, down to zero? Well, it's only a $40 drop, okay? AT&T, we got AT&T on the list. We're going to take a look at that a little bit later. TSM is going to the moon. Well, good for you, Robert. I don't think so. I've never heard of TSM. Okay. TSM is at 179 at the moment. All right. So if you're buying at a high, you're pretty high, and I don't do that. Okay. WW. Never heard of WW. WW, $1.25. Ain't no way possible that thing has 20 years of increased dividends. SDIV. It's a monthly. That's a big fat no. I don't do monthlies. They just don't pay. AT&T Terrible Management. Yep. Would you sell a call if you don't own the shares? No. SMCI. That's a big fat no. SMCI. Okay. SMCI, $920 a share. Yeah. Good luck to you. Now, the reason why I don't like stocks over 250, it's a long ass way to drop from $928 to zero. Yeah, it's a long way to CHD. CHD. No. Two reasons. Number one, it's at an all-time high. Number two, it's a monthly. Monthlies pay crap. Okay, this is buying a dividend stock, selling a covered call against one of the safest strategies are. Tesla's a no, they don't pay dividends. Okay, dividend investing for weekly cash flow. Right in the title, dividend investing. Tesla, no dividends. Weekly cash flow, CHD, no weeklies, only monthlies. It's a no. Churchill Downs can buy in May. It goes up 20 a share. Okay, great. Intel. Intel is on my list. We'll take a look at it. CMG. CMG. Oops. CMG. Chipotle. That's a no. Two reasons. Number one, they don't have 20 years of increased dividends. Okay. Number two, $3,500 a share. Yeah, no, thank you. AISP, AISP. Most likely that's going to be a no, and it is a no. Look at that. $4 a share. It's a monthly. Monthlies just don't pay. I don't understand what you mean by that. Salesforce Management has issues as well. Robert, you got to give me the ticker symbol. Don't have any idea what you're talking about. Mr. Wayne, what's the safe price you should trade per share? Okay, Mr. Wayne, I can't tell you what to do. I can only tell you what I do. I like $250 or less because it is affordable for me. HE, never heard of HE. Airship Holdings, yeah, that's going to be a no. Okay. I don't think Airship Holdings has 20. Oh, Hawaiian Electric. I don't think Hawaiian Electric has 20 years of increased dividends. Okay, well, we'll check. Let's take a quick check. I don't want to say no and be wrong. Okay. HE, Hawaiian Electric. Okay, they do have dividends. Okay. But they don't increase consistently. Oh, check it out, to 87. All right. 23, 24, 26, 27, 28. Okay, they don't increase consistently. 29, 30, 31, 96. You got to be kidding me. From 1996 to 2018, they didn't increase their dividends. So there's no increase in the dividends whatsoever for Hawaiian Electric. Okay, now 2019. Okay, 30K. Yep. All right, now I'm not a big fan because they don't consistently increase. All right, so let's take a look at the numbers. All right, it's in a downturn. Okay, right now at 950, the 950 is going for 25 cents a share. That's well over 1% per week. That's well over 2% per week. But let's take a look. Okay, here's your 30-day high right here, 1180. Here's your 30-day bottom right there, 940. So keep an eye on it. All right, I'm going to write that down because I like the way the chart looks. HE, Hawaiian Electric. Now, I don't like Hawaiian Electric because they don't increase their dividends consistently. There's no consistency to the increase. Okay, fine. But look at the chart. 30 days ago, we're at $11.80. She drops down, back up, drops down, back up, drops down. Here's where we are now. Okay, that is going to jump up eventually. When? Well, I don't know. We're going to keep our eye on it. Once it finds its bottom, I mean, look at the downturn. Hawaiian Electric, they're an electric company. They're offering electricity to the Hawaiians. I mean, how much better can you get than that? Okay, utilities are great investments. It's something that everybody buys, regardless of what's happening in the economy. Everybody needs electricity. All right, so That being said, Hawaiian Electric. Cool. All right. TLRY. Really, Corey? TRLY. Can't find that simple. TLRY. Tilray Brands. That's going to be a no. Okay. Corey, let me tell you why it's a no. Rule number one, at $1.70, at $1.70, how can you honestly tell me that they have had 20 years of increased dividends? Okay, if they don't have 20 years of increased dividends, why are we looking at it? Because when, and I'll point it out to you, look, she goes up, goes down, goes up, goes down, goes up, goes down, goes up, goes down, goes up, goes down. When, not if, when the stock goes down, what am I collecting if they don't have dividends? Well, TLRY. TLRY. Tilray Brands. Oh, look at that. No dividends at all. Yeah, big fat no. Alrighty, so TLRY is a no. Ethan, Visa is on my list. We'll take a look at it in a bit. Oh, I missed all these. Okay, TLRY. There we go. Questions, questions, questions. Robert, just ask Nancy Pelosi if you want something safe. Okay. All right, Crispy Hawaiian is down because of the fire. I get it. But eventually, they're going to go back up. Because you think of it this way. If the infrastructure is already there, the electric companies are already there. Okay, they are producing electricity. Well, I'm assuming they're producing electricity. Okay, so, and if they're not producing electricity, they have the licenses to produce the electricity. Okay, so that being said, eventually, it will go back up. So you keep your eye on it. It's going to hit a bottom at a certain point. Okay, you find out what was the book value for Hawaiian. You know what? Let's find out what is book value for Hawaiian Electric. HE. Now, somebody asked earlier, what is a book value? Well, book value, basically, if you sold off everything the company owns. When I say everything, I mean literally everything. Everything the company owns. If you sell it off, you pay off the investors. What is that value? Okay, check it out. The book value for Hawaiian Electric is $21 per share. $21 per share. And what is the market value at this moment? $9. Okay, so you're buying a $20 stock for $9. Think about it. A $20 stock for $9. Now look at the numbers. At $9.50, the $9.50 is going for 20 cents. Okay, that's more than 2%. Diane, hey Diane, how you doing? Okay, so and we don't want to look at July's. And next week's the 950 is going for a nice number also. Okay, 95, 97, but you can't go by that number. Oh, now in case you guys didn't know, all right, for those of you guys that are new here, don't know this screen right here behind me is live on YouTube because I'm pretty sure you guys can't read these small numbers on your phone or your iPad. Okay, so if you can't read these numbers on your phone or iPad, that is live on YouTube. He is down because of fire. Yep. Albert. Hey, Albert, how's it going? He is big fires, probably going to have a major litigation for deaths. Maybe. I don't know. Now, is it Hawaiian Electric's fault that the fires were there? How often do you see dividend achievers rise in EX dividend? All right, 1922. I'm not quite sure we're communicating on the same level here. Now, when I say I like stocks, I like to buy them before the EX date because before the EX date, the stocks have a tendency to go up in value. Okay. after the dividend. These little green dots represents the EX dates. Now, for those you don't know, there's 4 dates. 4 dates you need to remember when it comes to investing in dividend stocks. Date number 1 is the announcement date. That's when the company announces a dividend and tells you when and how much they are going to pay. Date number 2 is the most important one. That is the EX date. The last day the stock trades before the dividend is paid out. That's the most important one. It's called the EX dividend date. That's what these little green dots are. Okay, Intel, Kinder Morgan, Citibank, Ford, Archer Daniels, Kroger, Target, ExxonMobil, Aflac, Johnson & Johnson, Walgreens, 3M, KeyBank. You guys heard of all those companies. Those are the only ones that I do. You guys give me this weird stuff like SWKS, DKS, ARM, DUK, ECL. I have never even heard of some of those. Now, I've been doing this for over 20 years. If you think you can squeeze by a company that I haven't seen or I haven't heard of, good luck to you. Okay, so the dividend achievers. I don't think the dividend achievers are the ones I want to be looking at. Hold on a second. Let's find out. Whoops, dividend achievers. Okay, yeah, I don't do the dividend achievers. Yeah, I thought so, because dividend achievers only have 10 years of increased dividends. 10 years. To me, that's not enough. I like the dividend aristocrats, 25 years. The dividend champions, 25 years. The dividend kings, 50 years. Okay, those 3 lists I just gave you are over 150 stocks to take a look at. And then once you throw in, wait a minute. Yeah, then the dividend contenders, that comes up to over 300 to look at. Okay, so I like 20 years or more. So the dividend achievers, yeah, I don't look at those. Sorry. Negative performance on the list for the last 10 years. Okay. You don't pay dividends anymore. Oh, so why would we want to do that? DraftKings, yeah, no. DraftKings doesn't have 20 years of increased dividends. Are you Jeff Daniels' younger brother? Yeah, my name's James Daniels. No, I'm not Jeff Daniels' younger brother. Mr. Wayne, where do you research to find these important dates? Are you talking about these dates here, the EX dates? You can go to Google and look EX dividend calendar, and then you'll pick up a calendar. Okay, this one right here is attached to a trading platform from Charles Schwab. This is called Thinkorswim. Okay, it's a trading platform created by a professional trader. That was Tom Sosnos. He runs Tasty Trades nowadays. He sold out, got a huge, absurd amount of money. He got bought out by TD Ameritrade. TD Ameritrade got bought out by Charles Schwab. Now this is available for Charles Schwab. You can download this onto your computer and just go trading from there. Okay. Now, I like this one because this one has everything I'm looking for. And where do I do my research? Google. Okay. Dividend Kings, Dividend Aristocrats, Dividend Champions, Warren Buffett's list. You just put it into the Google search and it'll actually give you the list of those stocks. And then you cross-reference them with the Chicago Board of Options. That will tell you which ones have options. It's pretty easy. Okay, so Hawaiian Electric, no more dividends. So Hawaiian Electric is a no. ONON. Are you serious? ONON. ON Holdings. Never heard of them. 42. Alrighty. They have weekly options. Great. Let's get out of that. ONON. Statistical data. Let's take a look at statistical data. I understand EX date is what is important, was my real question. I appreciate it. The EX date. Yeah, you can find that. It's called an EX dividend calendar. You can do a Google search to give you a whole bunch of them. All right, so we're looking at ON Holdings AG. I have no idea what that means. Let's take a look at the dividends. No dividends. That's a no. Bob. Hey, Bob, you've been here long enough. You know I like only companies that have increased dividends. This has no dividends at all. Is a newish sneaker company. All the kids are wearing them. No, not all the kids. My grandson's not wearing them. He's a kid. Okay. My children aren't wearing them. Okay. All right. Anyway, so ONON is a no. Sorry. Okay, you made squirrel. Yeah, I get off track once in a while. Okay, so let's get back to my list. My list. Next one on my list is NLY. 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 Annaly. Now, Annaly is one of those interesting ones. Hello, hello. Angel, how's it going? Okay, so NLY, Annaly Capital REIT, Real Estate Investment Trust. Not really fond of them, but let's take a look at the numbers from Yahoo Finance. NLY. Okay, so they do pay dividends. Okay, that part's good. Now let's see how long they have been paying their dividends. Yep, I just figured out why I don't like them. Okay, so here's the dividends. Goes all the way back to 1997. Okay, doing great and here to learn how to make some money. All right, well, if you're looking to make a bunch of money, like buy something, have it go through, you're at the wrong place. This is slow, this is boring, this is methodological, is that right? It's one of those words, but GIS, ooh, I like GIS. All right, GIS is week 2. Numbers were cool. We'll take a look at that one. Nope, I'm here for the long haul. Well, alrighty, methodical. There you go. I knew it was one of those words. Okay, it's very slow, it's very boring, and this is why I don't like Annaly. Are you ready? Now remember, this chart is live. I mean, this screen is live on YouTube, so you can actually see these numbers. Now I'm going to read them to you. 1997, they started out 88 cents a share. Then they went to 128. Then they dropped to 108. Then 122, 132, 140. Oh, looks good. Then she drops down 140 down to 120. Then she drops down to $1. Back up to 120, 160, 180, 240, 250, 270, 240, 112, 2, 192, 2, 180, 144. Went from 144 to 52 to 40 to 44. Yeah, they're all over the place. Okay, and where are you going? In 2012, 180. Then she drops down to 120. Then she drops down to 14 cents to 120 to 89 cents to 31 cents to 120 to 1 to 88. Now we're at 65 cents. Yeah, no, there's no consistency with the dividends. So seasonal GIS doesn't look too good. Al, we're going to take a look at that in a second. AXP, I need to make back what I spent. Well, righty then. MOBYDGF. Are you just punching digits? I mean, are you just punching letters on the keyboard? Because that thing makes no sense to me whatsoever. BYDGF. BYDGF. Boyd Group Services Incorporated. Yeah, no options. That's a no. Sorry. Hey, 86. Hey, everyone. AXP, American Express. You want to make back the money you spent? Here's a good idea. Stop spending money you don't have. How's that? All right, let's take a look at American Express. 229 to 230s are going for 287. That is well over 1%. Yeah, gotta love it. What's better than that? Let's take a look at this. Take a look at the chart. Here's the high, here's the low a year ago, and now in what direction she's going? She's going to the upside. American Express, don't leave home without it. You ready? You're going to like this. A year ago, 170.99. Got a double bottom at 140.47. She tops out at 244.19. Check it out. 244.19. Now I want to go from the last 90 days. Check this out. 90 days ago, right about there. All right. High, low, where was it? Where is it? What direction it's going? It's still going to the upside. Okay, look, up, down, up, down, up, down, up, down, up, down, up. Where do you think it's going next? Let's take a look at the last 30 days. The last 30 days would be right about here. Right about here. 30 days ago, here's your 30-day high, 244. She drops back out, drops back out, drop. That's a big drop. Look at that. 1, 2, 3, 4, 5, 6, 7. 7 days to the downside, 3 days to the upside. What do you think that means? I like 2 days to the upside before I jump back in. Here's your 30-day bottom, 1 day up, 2 day up. Great, great time to jump in. What's your American Express? Now look where it is now, 229. Where's the 30-day high? Way up here. You got a long way to go to challenge that 30-day high. Now, is that guaranteed? No, it's not guaranteed, but take a look at the numbers. What is the chart telling you? Well, 30-day high, down, up, down, up. That's what it's telling me. So what does seasonality look like? What does it normally do this time of year? This time of year, American Express usually just goes sideways. No big ups, no big downs, no big surprises. Well, great. What is this? What is the trend? Because you can't fight the trend. If the trend is an upward direction, great. Because right now, okay, down, now she's bouncing. Okay, when you find the 30-day bottom, you cannot get any lower than the 30-day bottom. Here's your 30-day top. Here's your 30-day bottom. Where's she going? Well, she's going to the upside. How long do I want to jump in for? I only want to jump in for a week. I want to buy it first thing in the morning at 229.60, sell it off at 230, collect 287. That is more than 1%. And then if she's above 230 next Friday, look where she is now, 229. How much further does she got to go to hit 230? Well, it's only 69 cents before it hits 230. As long as she's 230 or above, I get all my money back. And then I still make over 1% for the week. I know 1% doesn't sound like much, but 1% every single week is over 50% per year. And we're not talking about weird-ass companies that nobody's ever heard of. We're talking about American Express. Don't leave home without it. Okay, so it's not a suggestion. It's not a recommendation. I'm just reading the numbers and telling you what I'm seeing. I'm seeing a 30-day high. I'm seeing a 30-day bottom. I'm seeing 3 days to the upside. I'm also seeing what I can buy for first thing in the morning. I can sell it to someone else for 230 and bring in 287. That's over 1%. And that expires next Friday. Not this Friday, but next Friday. So as long as the stock is above 230 by next Friday, I'll be back into all cash and I'll have that extra 1%. Well, a little bit more than 1%. Okay, so that's American Express. I like it. Don't leave home without it. Next on the list is Energy Transfer. Where can I find those charts? Cloudflower. This right here is on Thinkorswim, which is free to download online. Poseidon's Last Molar. Buffett has held American Express forever. Well, alrighty then. If it's good enough for Warren, it should be good enough for you guys. I'm not recommending it. Okay, I always recommend you guys do your own research. Find out. Okay, remember the rules. Rule number 1, never buy something you don't understand or you don't want to hold long term. Number 1, do you like the company? Do you like the company at 229? Because it's at 229.60 right now. So if you're going to buy it and hold on to it, do you like it? Do you want to hold on to it? Right now, it's bouncing off of a 30-day bottom. But where is it? Where's the bottom of the year? Look at the bottom of the year, 141. The top of the year, 244. Okay? Now, is this something you want to jump into? Because up here, this is where she's dancing now. But eventually, the people who bought last November at 140, they're probably going to want to cash out some of that profit. Maybe. Need that wind blowing on me. All right, so that's American Express. I like American Express. Next one on my list is going to be Energy Transfer, ET. All right, 1551. Okay, Energy Transfer. Do you like Energy Transfer? Well, let's take a look at the numbers. 1551 to 1550 is going for 12 cents, not quite 1%. Okay, even though the chart is looking pretty good. Look, 90 days ago, Down here at 15, she was up, down, up, down, up, down, up, down, up, down. Now she's going to the upside. Great, but it's not giving me 1%. It's giving me less than 1%. And if you like less than 1%, hey, fine. Okay, even at a 0.5%, which this one is at 1550, 1550 is 12 cents, which is about 0.75, 0.8. That's still over 40% for the year. Okay, if you like energy transfer, ask yourself the question: do I like energy transfer? Do I want to own energy transfer? That's the question. All right. Next on the list, DOCU. Never heard of them. DOCU. DocuSign. Yeah. Why is it I think DocuSign doesn't have 20 years of increased dividends? So why are we looking at DOCU? Yeah, no dividends. Sorry. Eli Lilly. Now I know Eli Lilly because Eli Lilly is on my list. LLY, there we go. And it's a no. 2 reasons. Reason number 1, it's about $900. Reason number 2, it's at the high of the year. It's never been this high before. If you think it's still going up, more power to you. ABT, Abbott Labs, it is on my list. And just adding it right now. So we won't get to it tonight. Okay. Timothy, we probably won't get it to tonight because we're at 10 o'clock with an hour and a half left to go. And I got all of these to go. And yours is right there at the bottom. I do them as they come in. Abbott Labs is a great company. It is on my list. Most of the time, it all depends on what the numbers look like. Because the most important thing I look at are these numbers right here. If I'm going to buy it, what am I buying it at, and what can I sell it for? I sell covered calls. I buy a good quality stock, sell a covered call against it, bring in 1% every week. That's over 50% per year. All right. VOD, Vodafone. VOD. Wow, all over the place. Do you see that chart, how choppy it is? Look at this. Gap, 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 gap. Gap, 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 all over the place. No consistency there whatsoever. All right, 8.94. The 9's going for 8 cents, barely 1%. She is bouncing up. Okay, VOD. VOD, Vodafone. What kind of dividends do they pay out? All over the place. Okay, 97. Wow. Are they paid twice a year? Yeah, they do. They pay twice a year. All right, so Vodafone pays twice a year. Look at the numbers: 13, 15, 12, 13, 12, 14, 16, 17, 19, 22, 41, 47, 52, 101, 39, 80, 46, 83, 47, $1, 114, 103, 53, 107. Yeah, all over the place. And now we're down to 46. Yeah. What are the gaps? All right, Angel, hold 1 second. I'll isolate them and show them to you. All right, Angel, you ready for this? You see the space between here and here, 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 here and here. Those are called gaps. Okay? Gaps have a tendency to fill. What does that mean? Well, you see this gap here and this gap here? Well, it filled. It came down and it came all the way down. That gap filled. What gap hasn't filled? This one. Okay? This is going to come back up and go all the way to the upside. So Vodafone does look like it's going to have a good run to the upside. What's the last 30 days look like? Okay, here's the last 30 days. Check it out. 30 days ago, $9.08, $9.80, drops down to $9.30, pumps back up to $9.80 again, and then drops down here. 2 days to the upside. I like 2 days to the upside, and then I like to jump in. Perfect opportunity if you like Vodafone. Now, I think Vodafone is adequate. okay? At the $9, okay, $8.94, the $9 one's going for 8 cents, not quite 1%. But look at the chart. The chart's telling me this thing's going to go to the upside. If you like Vodafone, that's the question. Do I like Vodafone? Yeah, they've been paying dividends. They pay dividends twice a year. Twice a year. Okay, and I don't know if, when did they have their let's find out. Okay, so not in May, June 8th. June 7th. Okay, we're in the 19th. Wait a minute. We're on June 19th. Yeah, they paid a dividend 2 weeks ago. More than likely, it's going to be no for the dividend, because the dividend is not going to be up for another 6 months, because they pay only twice a year. Okay, so they paid 2 weeks ago. So we're not going to see another dividend for Vodafone for 6 months. But look at the numbers. Okay, here's your high. This big, huge gap, that's going to fill eventually. So we're down here, the 30-day bottom, 3 days ago. 2 days to the upside. Usually, the next day is going to be the upside also, if you like Vodafone. I'm going to write that one down to keep my eye on it. VOD. I'm not going to circle it. I'm just going to write it down to keep my eye on it. All right. Next on my list. HON. I have no idea. Honeywell? Honeywell is going to be a no. Okay, the reason why Honeywell is a no is at the high of the year. Okay, now if you like puts, great time to buy a put. But I'm not saying, I'm not recommending it. I'm just saying, look at the numbers. Up, down, up, down, up. Where do you think it's going next? It's pretty plain to see. Where do you think it's going next? Eventually, you and I are going to say, no, that's too expensive. At what point do we say that? All right, next one on the list is NOC. What is NOC? Northrop Grumman. Well, it's a no because it's over $400. I don't do $400 stocks. Okay, look at your high. Your high's right here, 490. She dropped 2 days to the upside. Even though yesterday was a down day, it was still up. What do I mean by it was still up? Well, the 30-day bottom was last Friday. Monday was higher and Tuesday was higher. Now, even though Tuesday was a red day, which means she opened up higher and then closed lower, she still has a higher high and a higher low. Okay, 17 right there. Okay, here's the last 30 days. 30-day high, 475. She drops, a little bit of bounce, drops back down, back down again. This could be this repeating. See, this here could be this repeating. See, 30-day bottom, 2 days to the upside, and then she keeps going down. Again, 30-day bottom, 2 days to the upside. It could happen again. I would wait another day or so just to see what happens. But that's just me. What do I know? All right. PANW. PANW. Palo Alto Networks, 317s. It's over my budget, which I don't like. Okay. Here's the high of the year, 380. The low of the year, look. Ooh, do you remember what I tell you if you don't take your profits? This is a perfect example. Take a look at this. You're going to love this. Okay, so January 1st, right to there. All right, take a look. From January 1st, okay, 285, January 1st, she shoots up to the second week of February, pulls back a little bit, and if you don't take any of this profit here, look what the market maker did. From 265, so from 365 to 265. The market maker took $100 off the table. Okay, look, the stock was at 280, okay, in January. She jumps up to 380, and then she's back down to 260. The market maker took $100 away right there. Do you see it? From here to here, the market maker took, if you don't take your profits, market maker will take it away from you. Okay, buy low, sell high. Simple. Buy low, sell high. Well, where's the low? The low's right here. Now it's going back to the upside. All right. AA. Isn't that Alcoa? Yeah, Alcoa. Interesting. 37.90 Alcoa. Take a look. 37.90. The 38s are going for 83. That is more than 2%. I like more than 2%. Alcoa. Look at the chart. What's the chart telling me? Well, here's the high. Here's the low. Here's where it was. This is where it is. What direction is it going? It's going to the upside. That's clear. Clear as day. Clear as day. Going to the upside. Let's take a look at the last 90 days. All right, 90 days ago. Take a look. High, low. Where was it? Where is it? What direction is it going? To the upside. Great. Let's take a gander. Beginning of March, 2650, shoots all the way up to 4570, something like that, right there. Pulls back, and look at this. New 30-day bottom right there with Alcoa. Last 30 days. Here we go. Here's the last 30 days. Check it out. Okay. Up, down, up, down. Where do you think it's going next? I mean, come on. Think about it. You can't get any lower than the 30-day low. We're going to write Alcoa down only because I like the way the chart looks. All right. And Alcoa is a great company. Okay. They've been around for a very long time. Okay. 30-day bottom yesterday. What's she going to do tomorrow? Don't know. We'll find out tomorrow. Okay. We're going to keep our eye on this one because as soon as she turns around, goes to the upside, I want in on that action. But that's me. Alcoa just filled a gap from May as well. Okay, let's take a look at that. I'm not seeing the gap there, dude. Okay, here's April. Okay, here's April. Okay, May is right here. There's no gap there. Right? There's no gap there at all. Which one is this one? Alcoa, AA. AA, Alcoa. Been around for a very long time. All right, I like Alcoa. So, for those of you guys who've been following me, I wrote Alcoa down for next week. May 13th on a 4-hour chart. Oh, all right, Bob, I don't look at those 4-hour charts. I go day to day. Okay, this is like, okay, Bob, when I say, hey, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. That means I'm online doing my trades on my personal account 10 minutes a day. That's it. Okay, 10 minutes a day. I don't sit there in front of the computer, 4-hour chart. Yeah, no. Thought Alcoa had financial issues. How's their dividend? Ooh, hell, interesting question. Let's take a look. Going into Yahoo Finance, into the history. Alcoa, 10 cents. Oh, that's horrible. Okay. That's a very valid question there. Hal, thanks for pointing that out. Check it out. 1997, 15 cents, 23 to 15, 15 to 24, 24 to 30, 36. Stayed at 36 for quite a while. Jumped to 41. Great. And then 09, she went from 41 to 7. And stayed at 7 for a long time. Wait, hold on a second. Okay, from 09 to 16. That's 7 years the dividend stayed at 7 cents. Then she jumped to 10 cents, and it's been at 10 cents ever since. Yeah. Sorry. I really don't like Alcoa that much. I like consistent increases in dividends. Thanks for pointing that out, Hal. All right, next on my list. Ooh, Kroger. Now, we had a couple people um, asking about Kroger the other day. Now, I'm kind of curious. Who was asking about Kroger the other day? All right, first I want to take a look at 52.55. 53s, $1.16. That is over 2%. Kroger is on Warren Buffett's list. Okay, let's take a look at the numbers. Here's the high, here's the low, here's where it was, here's where it is, and this is the direction it's going. Okay, to the upside. Great. Abbott Labs looking good. Well, Alex, we'll take a look at Abbott Labs is on the list. Felix. Okay, it's already on the list, so we'll take a look at it. We are on Kroger. All right. A year ago, 46.23 bottomed out in November at 42, topped off at 58.30 in the beginning of April. From the beginning of April, take a look at what we're looking at. Beginning of April was a high at 58, down, up, down, up, down, up, down, up. Look at the gap right there. Okay, now we were looking at this last week. Some of you jumped into this last week. Good for you. Last 30 days. Here you go. Take a look at the last 30 days. 30 days ago, 54.50. Last week, last Thursday, was at 49.60. And then she gaps up. She got plenty of room to keep going, but she's got this gap here. Okay, so if you like Kroger, that chart looks pretty damn good to me. And they're offering over 2%. If you buy it first, if I buy it first thing in the morning, 52.55, I sold the 52.50s. Sorry, the 52s, $1.62. It's still over. Yeah, that's still over 2%, close to 2%. All right, so I like Kroger. What does Kroger normally do this time of year? Normally this time of year, check this out. Smidge to the upside. You see that? Okay, this is where we are now. 10 years of data pointing it has a slight upward trend for the next month and a half or so. Okay, great. I like Kroger. Okay, that's Kroger. Next on the list, John Deere. John Deere is usually a no because it's a little pricey for me. But John Deere is a great company. Okay, 383. And we looked at this a couple of weeks ago. Somebody wanted to take a look at it. We took a quick look. It looks favorable. Okay, 383. 382.50 is going for 480. The 385 is going for 355. You could probably get 1% out of that. But looky here. The high here, she dropped, and then she's going to the upside. Plenty of space to go up and challenge that new high. Check it out. Okay. Beginning of April. Up, down, up, down, up, down, up, down, up, down, up. And it has all this room to run. Nice. I am planning to sell a put for Kroger. The premium is good. Simone, I really can't give you advice on that, Simone. You know how I feel about puts. I don't do puts at all. Okay? But if that's what you're up for, more power to you. Next on the list, LNC. LNC. Lincoln National. No. Lincoln National is a no. They're monthlies. What does that mean? I can only do it once a month. Once a month means 12 times a year. 12 times a year does not give me 50% per year. I like the weeklies, only the weeklies. Coca-Cola. Coca-Cola is always a no. Not because it's not a good company, but because of the premiums are horrible. 62, 66. The 63s are going for 34 cents. 34 cents is 0.5%. 0.5% on a weekly basis is, you ready for this, is only 26% per year. Only 26% per year. Look at the chart. Okay. 90-day bottom, Shoots on up, pulls back, shoots on up, pulls back. Look at this, 2 days to the upside. Where do you think it's going? That baby's going up. What's Coca-Cola normally do this time of year? Well, normally this time of year, Coca-Cola goes flat for a little while, then she's going to shoot on up in July. Well, that's what it normally does. What is a premium? Mr. Wayne, what is a premium? Oh my goodness. Hold on a second, Mr. Wayne. Let me find a good one first. DNP. What the heck is DNP? DNP. DNP. Okay, that's a no. No to DNP. AT&T. Here we go. All right. All right, Mr. Wayne, you ready for what a premium is? Check it out. Up here, this is what's called the trade grid. The last trade, the bid, what I can sell it for, the ask, what I can buy it for, the open, the high, the low, the close, the volume, how many shares are being traded. That's all the information about the stock itself. Underneath the information on the stock is what is called the option chain. Okay, an option is basically your right to buy or sell, or to sell somebody the rights or obligations. Because a call option is a right, not an obligation. A put option is an obligation. Okay, so hypothetically speaking, if I buy AT&T at $18 and I sell somebody the right to buy it from me, the right, not the obligation. That means they can do it if they want. They don't have to if they don't want to. Okay, it's kind of like selling a car in your front driveway. Put your car in the driveway, slap a for sale sign up, put a price on there. Someone comes by, Tom comes by, and Tom says, "Hey, I like that car. Let me give you $100. Hold it for me till Friday. I'll come back and pick it up." Great. Friday comes by, he picks it up. Great, he gives you the money. He doesn't come by, you keep the money, and then you sell it to someone else the next week. So an option, specifically the options that I do, are weekly options. 21 June, that's this Friday. 28 June, that's next Friday. 5 July, that's 3 Fridays away. 12 July, that's 4 Fridays away, so on and so forth, week by week by week by week. I can do it 52 times a year. Monthly, some stocks have monthly options, some stocks have weekly options. A monthly option, I can only do it once a month, which means I can only do it 12 times a year. So if I get 1 or 2% on a monthly option, that means I'm only making the 24 to 25% per year. Weekly options, I look for 1%. Well, 18, 18, 23, that's over 1%, which means 1% per week is over 50% per year. Now, what is a premium? A premium is more or less a non-refundable deposit. I like the stock. I want to buy it from you. I'm going to give you 23 cents a share for you to hold it for me. Okay? If I sell the option, I'm selling it, giving someone the right, not the obligation, to buy it from me at a certain price by a certain date. Okay? So it's called a covered call. I would buy the stock and I would sell somebody the right to buy it from me for the exact same price I paid for it. If I'm paying 18, I sell it to someone else. I sell somebody the right to buy it, not the stock itself, the option. Okay? I sell somebody the option to buy it from me at 18. For that, they give me what is called a premium or a non-refundable deposit. So if the strike reaches the target, they don't have to buy it if they don't want to. Simone, you hit it on the head, okay? If I buy it at 18, sell someone the rights to buy it from me for 18, and let's say it goes to 1801, if they don't want to buy it, they don't have to. Okay? It's 1799, they don't have to. 1850, more than likely they will. Okay? If it goes to 19, more than likely they will. Okay, but if it's 18, 1801, 1802, 1805, they may or may not. Because you got to remember, they're paying 23 cents a share for that privilege. So they have to add that into their calculations. Is it worth it for me to do it? You know? But you're right, Simone. Right on the nose. See? I told you you'd learn. You've been here long enough. You're learning. That's a good thing. I'm just waiting for you to sign up so that you can, we can chat in the mornings. Okay? I can walk you through some of the trades. You can start making real money. All right. Anyway, next on the list. Okay. Now, I'm pretty sure the guy who suggested JEPI last night probably ain't here. JEPI. So I could probably just say no right now. No, it's a monthly. Nope. Snow. SNOW. Ooh, Snow. Snowflake Incorporated, 127. Let's look at Yahoo Finance and see what Snow does for dividends. Oh, no dividends. No to Snow. AGNC. AGNC. 973. Okay, 973. Yep, that's going to be a no. Here's the reason why AGNC is a no. No dividends. Yeah. Dre, how much money do you need to make real money minimum? All right, Dre, when I say I make 1% per week, okay, 100,000, 1% per week is 1,000. 50,000, 1% a week is 500. 10,000, 1% a week is 100. Okay, 1 million, 1% a week is 10,000. It all depends on what you start out with. So at 50% per year, if I have $100,000, I'm looking at bringing in 50,000 a year. Okay, at 500,000, I'm looking at bringing in 250,000 a year. 1% a week is more than 50% per year. So it really depends on what you want to do. Okay, totally. Everyone is different. I don't think there's a single person here that has the exact same amount of money as anyone else. We all have different amounts of money to work with, to play with. We all have different dreams, all have different aspirations. We all have different risk levels. I have a very high risk level to a certain point. Okay, I've been doing this long enough, so I'm pretty good at what I do. So I have more risk than some other people. Now, I don't like huge amount of risks. I like safe, predictable, and consistent. All right, so AGNC is going to be a no, reason being 973. The closest one is going to be the 10. 10's only going for 2 cents a share. That's a no. Sorry, not even close to 1%. All right, next on the list, AAP, Advanced Auto Parts, 64.50. The 65s are going for 127. That's 2%. The 64 is 176. Again, almost 2%. All right. What's the chart looking like? Ooh, the chart's looking good. You guys pay attention to this one. I'm writing this one down. AAP, and I am circling it because I like Advanced Auto. All right. High, low, where was it? Where is it? Which direction is it going? Great. Let's take a closer look. A year ago, 68.49. She drops down to 48, and that was back in the end of October. How do you sign up for the mornings? Oh, why is companies having dividends important? Mr. Wayne. Ooh, that's a good question. Mr. Wayne, are you ready for this one? Because Mr. Wayne, you're relatively new here. Okay, so I'm going to cut you a little bit of slack. But here's the thing. Why are dividends important? Well, I can take a deep breath for this one. All right, there's 9,547 companies available to choose from on any daily basis in the stock market. Okay, out of those 9,547, only half of them share their profits. They share their profits, what is called a dividend. A dividend is nothing more than your share of the profits. If you buy and sell stocks, you become a shareholder, a stock buyer, or whatever name you want to put to it. Okay, so as an investor in any company that you decide to invest in, you are entitled to a share of the profits. 2 different ways. One, in a cash payment, which is a dividend. 2, stock appreciation. They take the profits, put it back into the company, and the stock price goes up. Yeah, I don't do that. Okay, I like cash flow. My bills come due every month. I'm not looking for any company that doesn't share the profits. So I want a company that shares profits. Great. Well, how do you decipher those? Because there's over 4,000 companies that pay dividends. How do you figure out which ones are right? I figure if they've consistently increased their dividends for a minimum of 20 years, they basically, number one, have made it past wave number one, which is most companies go broke in the first 5 years. Okay. Number two, 1 in 100 actually make it to 10 years. 1 in 1,000 makes it to 20 years. So if you're consistently increasing your dividends higher and higher every single year, year after year after year, okay, you must be doing something right. And you got to be at least 25 years old, which means you have to be a decent company that's growing consistently because you're increasing your dividends. That's the profits to the shareholders. Great. Now, if the company doesn't pay dividends, what are you getting when the stocks go down? It's not an if, it's a when. Check out the chart. It goes up, it goes down. It goes up, it goes down. It goes up, it goes down, up, down, so on and so forth. So if a company doesn't pay dividends and doesn't consistently increase, what am I getting for my invested dollar? That's why I only like, hey, Amora, how are you this evening over out there in the Philippines? Hope you're having fun. All right, so if they consistently increase their dividends, that's what I want. That's me personally. Mr. Wayne, you don't have to do that. Why is it important to me? Because if and when, it's when the company goes down, because they always do. Look, it goes up, it goes down. Every single company does it. They go up and they go down. I want to be reassured that I'm getting higher and higher returns on my money. So if a company has consistently increased it for 20 years, more than likely they're going to do it for 21, 22, 23, so on and so forth. As long as they're consistently profitable, that's what I look for. Now, this is my house, my rules, whatever you want to call it. But think about it. If you're going to give your money to a company, don't you want to be reassured that they're profitable and consistently profitable? It only makes sense. Okay, so how do you figure that out? Well, you got the dividend contenders. Those companies have 10 years of increased dividends. Okay, fine. 10 years of increased dividends. There's a whole bunch of those companies. But I like companies with 20 years of historical performance. That's just me. And there's over 300 of them. So when I look at my schedule, my investing schedule, I have plenty of stocks to choose from on a weekly basis. Now, I only do this on a weekly basis. I don't do this daily. Okay, I'll only look at these companies. All right, I won't look at these. I won't. Okay, just this week here: Cardinal Health, Comcast, American Express, Cisco, General Dynamics, J.P. Morgan. Those are the only ones I want to look at this week. Why? Well, because they got a dividend coming up in 2 weeks. Dividend stock companies have a tendency to increase in value as the dividend is approaching. So if I'm looking, the dividend is approaching on these 6 companies, and I'm only going to pick one this week, so 1 out of 6 from this particular list. Now I have a bunch of lists because each one's different criteria, but this particular list, I'm only going to pick one. And then I want to buy it 2 weeks ahead of time. So I want to buy it on the 17th. So I want to collect the 1% premium here. If I get my 1% premium, great. I got my 1%. I'll see you again in 90 days. What do I mean by that? Well, each one of these companies pays out a dividend every 90 days. And guess what? Hey, these companies this week, these companies this week, these companies this week, that week, that week, that week, so on and so forth, so on and so forth. It keeps going over and over and over again. I have 300 different companies. Now, there's 90 days in a quarter: January, February, March, first quarter; April, May, June, second quarter; July, August, September, third quarter; October, November, December, fourth quarter. Every 90 days. It's like a revolving door. I will look at Cardinal Health. Okay, that's the first day of the third quarter. Okay, this is June. This right here is July. First, second, third, fourth, fifth of July. July is the beginning of the third quarter. Cardinal Health pays on the first day of the quarter. That means January 2nd, the first day of the first quarter, Cardinal Health. Okay, April 1st, 2nd, 3rd, whatever it is, the first day of the first quarter, Cardinal Health. Third quarter, Cardinal Health. Fourth quarter, very first day of the fourth quarter, Cardinal Health. Every 90 days. Either the numbers work. Let's go back home a second. Hold on. Okay. The numbers, they either work or they don't. What do I mean? Well, this is what I'm buying it for. Okay. If I'm going to sell a covered call, 64.50, the closest one's going to be 65. That's 127. That's over 1%. That's actually close to 2%. Great. 2% is better than 1%, because if you get 2% per week, you're doubling your money every year. 2% a week, 52 weeks in a year, that's 104% for the year. And that's not even compounded. Okay, so that's why, to me, dividends are important. Because when, it's not an if, it's never an if. Never, ever an if. It's a when. Okay, up, down, up, down, up, down. That's all stocks do. They do not come to your house, wash your dishes. They won't even take your dog out for a walk. They won't leave candies on your pillow after they make the bed. No, they go up, they go down. That's all they do. Okay, our job as investors, I don't know what your plan is. Okay, my plan, safe, predictable, consistent 1% per week. How do I do that? A good quality company, buying it at the right time. See right here, look at this. It's at a low of a 30-day period. We're going to take a look at that in a second. Now, do the numbers work? Am I buying it for this? This is what I'm going to sell it for? Let's take a gander at it. Okay? High, low, was, is, direction. Simple. All right? So a year ago, 68.93, bottomed out in October at 47.47, topped out in end of March at 88.56. Let's check it out. From the top in March, okay, she drops, pulls back, drops, pulls back, drops, pulls back, gaps down, pulls back, drops, and finds the 30-day bottom. Well, actually, it's not the 30-day bottom. Holy cow, let's take a look. Let's take a closer look at this. Okay. Okay. Interesting. All right, so it's not the 30-day bottom. Take a look. 30 days ago, all right, just under 75 bucks. All right, you can't see me. 30 days ago, just under 75 bucks. She drops, pulls back, gaps down, okay, pulls back up again, drops down again, pulls back up, and challenges the 30-day bottom. Look, over there, over here. Now she's going to the upside. Okay, high, low, and 2 days to the upside. To me, that's a buy signal. But that's me. You guys have to make up your own mind. Rule number one, never buy something you do not want to own. So if you don't like Advanced Auto Parts, don't buy it. If it doesn't make any sense to you and you don't understand it, don't buy it. But I'm pretty sure most people have heard of Advanced Auto Parts. Okay, they're in almost in every major city around. Okay, what does it usually do this time of year? Let's take a look at the seasonality, get an idea what ways this thing normally moves. To the upside, take a look at that. Okay, January to December, here we are the next 2 weeks. That's a little bit to the upside. Not huge to the upside, but I like to the upside. I like flat and I like to the upside. Okay, it's great for covered calls, which is what we're doing. Okay, we're buying it and we're buying it for one price and selling it for the exact same price. Okay, I like that idea. It's safe, it's predictable, it's consistent. Next on the list, ooh, ExxonMobil. Let me answer a couple of these questions first. Tiny, you want to learn how to sign up? You sign up over here. Hold on a second. At Patreon. Okay, Dividend Stock Talk on Patreon. You can do a Google search. Google search Dividend Stock Talk. I have a podcast. I have Patreon. I got a lot of stuff out there. but that's where you sign up over on Patreon. All right, next on the list, ExxonMobil, XOM. Ooh, I like that. Let's take a look at a couple more questions before we move on. XRP, yeah, XRP is a coin. We don't do coins here. Uh-oh, I missed a lot of these questions, didn't I? Abbott, looking good. Yep. Okay, what is a premium? We already did that. I already did Simone's. We did that. Sign up. We already did that. Coin is a no. Great job. An hour and a half. Yep. All right. Wow, I've already done an hour and a half. Ooh, I'm getting a little winded, a little tired. But let's push on. All right. ExxonMobil. It's an, ooh, I like ExxonMobil. Let's take a look. 109.67, the 110's $1.21. That's over 1%. Okay, you've heard of ExxonMobil. Everybody's heard of ExxonMobil. If I buy it at 109.67, I sell it at 110, I collect 121, which is over 1%. And here's another thing. Look at this. 109.67, 110. What's the difference? That's another 33 cents I'm getting on top of the 121. So that's 152, which is almost 1.5%. How far is Intel away on your list? Rambo Bambo. Yeah, dude, we ain't getting into it tonight. All right, so here's where we are right now. Okay, we got this many to go here. All right, that is what 6 to go there, and Intel is towards the bottom. Okay, all of those. There's no way I'm getting to it tonight. Sorry, Rambo. I do them as they come. All right, so what am I doing? Get me a little flustered. Oh, we're on ExxonMobil. Take a look at the number. Let's take a look at the chart. High, low, where was it? Where is it? Look at this. Up, down, up, down. Those are the big moves. That's a 1 year big move. That's not counting the little moves. Look at the little ones. Up, down, 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 so on and so forth. That's all it does. Up and down. Sorry, Rambo. You know, it's only fair when people come and they give me their suggestions. I take a look. You know what aggravates me? They give me a suggestion and then they'll leave. Oh, they won't take accountability. Okay, who gave me ECL? All right, they're not here anymore, but we'll take a look at it. All right, so ExxonMobil, a year ago, 103. She jumps up to 120, drops back down to 96, back up to the high of the year, 123. Now we're at 109. Last 90 days. Take a look at the last 90 days. 90 days ago, she shoots up nicely. Look at that, 104 to 124. That's a 20% increase. Okay, 104 to 124, that's a 20% increase. Now, last 30 days, we like last 30 days. Check this out. Okay, I'm actually going to write this down. Did I already write it down? No, I didn't. XOM. And I circled it too. Ooh, that's a good one. Check it out. 30 days ago, 120. Drop, up, drop, up, drop. Here we are right there. 108, 109. Okay, so she's jumping up. Okay, so she dropped right down there, right along the 108 area. That's the 30-day bottom. Okay, that was on Monday. Tuesday was an up day. Could Monday be the bottom of the 30-day period? Well, yes, it could. This could also be just a little hiccup. We won't know until tomorrow. Tomorrow, once it opens up, I want to take a look at this thing first thing in the morning. So you guys on the morning trading group, remind me to take a look at ExxonMobil first thing tomorrow morning, because I'm kind of curious. Okay, where is it going to be? I guess have to come back tomorrow. Same time. Rambo, I've been here every night, 9 o'clock to 11:30, Monday through Friday. I know, Monday. Yeah, no. I think Does anybody know how long I've been on? Because of the first week in January, I've been on since the first week in January. I've only missed 2 days. I go to the hospital one day. The second day, I was sick as a dog. Nice. I'll be here too. Solero. Lero? Is that right? Solero? Cool. Well, we'll see you tomorrow night. Hopefully, you're learning something. Okay? Because it's really simple stuff. What really bothers me, okay? What really bothers me is when people who don't know any better get sold something that they don't understand. Now, I'm sure you guys all heard of what's her name? Susie Orman. Susie Orman goes on television and tells people, hey, I used to work at Bear Stearns and I used to work on Wall Street and I sold people crap and it made me ill, but I sold it to them anyway. What is wrong with those people? Okay, they get paid to sell people crap, and they do. How can you sell someone a piece of crap and have a conscience and be able to sleep at night? Well, she did. She's rich now. Helen Keller. That's a terrible thing to say, Rocco. Anyway, Pepsi is next on the list. Don't get me wrong, I like Pepsi. However, Pepsi usually doesn't have very good premiums. Okay, what do I mean by that? Well, let's take a look. 166.69 to 167.50s are going for 120, not even 1%. And I really don't even care what the chart looks like. Look at the chart. That bad boy's going up. Let's take a quick look for those of you who want to take less than 1%. Pepsi's a good company, so let's see what Pepsi is offering. Hold on a second, Angel. It's intimidating because money is involved. Once you learn how it works, it's not hard. Yeah, Angel, I agree with you 100%. Now, before I knew anything, I was in the same situation as most other people. I go to the bank and say, hey, yeah, let's put your money into this CD. We'll pay 1.2% for the year. And then, you come back in a year and we'll roll it over and we'll do it again. Oh, cool. That sounds great. Really? 1.5%? And then once I read a book, it was called Wade Cook, Wall Street Money Machine. I forget why I read it, but it sounded interesting. So I read it and I think, holy cow, can this really be real? Can I buy a stock at this price, sell one of these, collect this, and then make 1 or 2% per month? That's what I was doing originally. Oh, I was so excited. I was making 12 or 13% per year. I thought that was great. And then they came up with weekly options. I didn't understand them at first, but as soon as I understood them, I said, I could do this 1% or 0.5% per week. Awesome. So 1% per week is, anyway. So once you learn something, once you understand it, great. Okay, so here's the 5 rules I made for my daughter. Number 1, never buy something you don't understand or you don't want to own. It's pretty simple. If you don't know what it is, if you don't understand it, don't buy it. Some of this crap you guys let me say some of this stuff you guys tell me to take a look at. Let me see someone. SVOL. Yeah, never heard of it. TH, never heard of it. MSFI, never heard of it. PCAR, never heard of it. TGTX, never heard of it. Okay, most of the stuff you guys send me, I've never heard of. Now, I've been doing this for 20 years. If you think there's a stock that has increased its dividends for 20 consecutive years, is under $250 per share, and has weekly options, and I missed it, hey, I'll be more than happy to dress up like a chicken and run through the center of town. But no, very rarely will I miss something because I've been doing this long enough. If you tell me a stock, I'll tell you whether or not Dr. Pepper's great. Has it really, Rocco? Dr. Pepper has passed Pepsi? Dr. Pepper, check it out. Dr. Pepper went from being America's 5th favorite soda in 2000 to now ranking as number 2. tied with Pepsi. Didn't pass Pepsi, tied with Pepsi, which has comfortably held that spot behind Coca-Cola for as much as 2 decades. Wow. Cool beans. Yeah, so Dr. Pepper tied with. Okay. Didn't surpass them. They're just tied together. Okay. I can dig it. Okay. Yep. All I do is read investing stuff. Rocco, yeah, okay. Edward, I thought Dr. Pepper and Pepsi were tied. They are tied. I like Dr. Pepper. Well, a lot of people like Dr. Pepper. Snapple is part of Dr. Pepper. I think Dr. Pepper owns Snapple or Snapple owns Dr. Pepper, one or the other. All right, so let's take a look at Pepsi. Now, before we do, Pepsi's not giving me 1%. Okay, look, 69, 166.69. The 167 is going for 120. The 165 is going for 160. If I do this, blah, blah, blah. Okay, let's do the math. It's confusing. All right, so if I can buy it, the 165s is going for 260. So get my calculator out. Okay, clear that. 165. All right, and then I add the premium. Okay, so 165, I add the premium to it, which is 260, plus the $2.60. That's what I'd be walking away with, 167.60. All right, so if I sell the 166.69s, I have to subtract 166.69, and that's my profit, 91 cents. It's not 1%. However, let's figure out what it is. So I divide it by 166.69. It gives me a grand total of 0.5%. Okay, great. 0.5% is still 26% per year. And it's Pepsi. Pepsi, we all know who Pepsi is. All right. So if you like, Pepsi is almost the same as Coca-Cola. They pay about 0.5%. So all right. So let's take a look at this. Last 90 days. Take a look. Okay. 164. She goes up, pulls back, pulls back, up, pull back, up, pull back. Now she's going to the upside. Look at where she is. From here, she goes all the way up to here to go. All right. So the last 30 days, right there. Okay. This is the last 30 days. Check it out. 30 days ago was the 30-day high. Okay. She pulls back, retrace, pulls back. Now it's going upside. I like 2 days to the upside. Look what we got. 1, 2, 3. This baby's going up. And this is for those of you who don't mind jumping into Pepsi and taking it for a ride, because they are paying out a dividend. The dividend, yeah, okay, fine. But the premium for the strategy that I like, 1% per week, this doesn't make it, because this is only giving me 0.5% per week. Oh, boo-hoo, 0.5%, 26% per year. How many of you guys out there, other than my students, are getting 26% per year? Especially with a company like Pepsi. All right, next on the list. Ooh, Ingersoll Rand. Another good company. That's a no. All right, it's at the high, number 1, and it's a monthly. Oh, okay, thank you. Dre, you like that? Does it make, all right, Dre, first thing you got to think of, does it make sense? Am I buying a good quality company, selling someone the right to buy it for me the exact same price? Only 5 people here. Well, that's there on YouTube. YouTube, I get a lot of, I'm relatively new on YouTube. TikTok, what last night was 9,700 people last night. That was a lot. The most I've ever had, I think, was 19,000 in one night. Or was it 21? I think we had 21,000 in one night. Anyway, yeah, Ingersoll Rand, it's a no. It's a monthly. The numbers just don't work. Okay, here's a good one. BGFU. Really? BGFU. I'm sure that guy disappeared who gave me that piece of crap. Can't find it. BGFV. Is that it? Oh, Big Five. Okay. Yeah, Big Five. That's a no. $3 stock. Really? It's dropping to nothingness. Okay. That's one I wouldn't touch. There's a reason why. No, Don't get me wrong, because this looks very similar to Walgreens. Walgreens has been in business for over 100 years. Big Five, no, they don't have the infrastructure that Walgreens has. Because Walgreens is in over every major city in the United States. Big Five, no, I don't think so. I've never even heard of them. I've heard of Walgreens. Okay, SCHD. I can tell you right off the top that's a no. SCHD. Okay, that's a no also. Monthly. I don't do monthlies. They just don't pay. BA. Is that Boeing? BA? Boeing 175. No, 170. Ooh, nice. I like the numbers. Let's take a close look at it. You ready? 175.24. The 175s are going for 355. Okay, that's a nice number. I like that. All right, so let's take a closer look. High, low, where was it? Where is it? What direction is it going? And look at where we are right now. That's where I find intriguing. Here's the low of the year, 160. We're at 175. Okay, I like that position. Well, let's take a closer look. A closer look a year ago, 216.85. We topped out in December at 267.31. Bottomed out the end of April at 159.70. That's a big drop. That's like an 80% drop. Yuck. All right, so from there, check it out. From the bottom of the year, here's the bottom of the year right here. She goes up, pulls back, up, pull back. What do you think she's going to do next? I want to put BA on our list to keep our eye on. Why? Well, number one, look at the numbers. Okay, BA is paying over 1%. Great. 30-day top, 30-day bottom here, up, down. I want you to find the bottom maybe in a couple of days. So this is a perfect opportunity to take a look at this one next week because I like the movement. Look at the movement. Up, down, up, down. As soon as it finds its bottom, it's going to turn around and go back up again. That's where I want to be as soon as it finds the bottom. A Boeing drop just like the planes dropped out of the sky. Yeah, Rand Laurie, I get that. Ain't Boeing having issues? I might be wrong. Yes, they do. But Boeing also has United States government military contracts. They ain't going anywhere, not as long as the military is involved. When their plane parts fall out of the sky, it tends to slow down. Yep, you're absolutely right. You're absolutely right. But here's the thing. What happened to ExxonMobil when the Valdez crashed in the Gulf? Well, of course, everyone was bitching and moaning about ExxonMobil. The stock crashed. Where's ExxonMobil now? Nice position. Same thing with British Petroleum. British Petroleum sprung a leak in the Gulf. What happened? The stock crashed. Where are they now? Well, they're a hell of a lot better. They paid their fees. They paid their fines. They did all that crap to fix their what do you call it, public image, and now they're doing great. Same thing with Boeing. Boeing had issues. All right, had issues. They're fixing the issues. Once you get them fixed, great. Jump back on the horse and you just keep on riding. Here's the bottom right there. Right? Up, down, up, down. Okay. Did they get the problems fixed? Are they on the rebound? Same thing with GM. Exactly. They went bankrupt and all the investors lost their money, but now they're doing fine. Well, a lot of companies do that. They get issues. They go to the bottom. They get some new blood come in. They fix the mess, and boom, you're good to go. Okay, Boeing's been around for a while. Boeing has military contracts. You think the military is going to let Boeing go underground? No. They'll go in and say, all right, this doesn't work, toss it. This doesn't work, toss it. Great. Now let's stick to what works. Okay? Get back to basics. Back to basics. If it doesn't work, get rid of it. If it ain't broke, don't fix it. It's pretty simple. So they did something, didn't work. Great. Now they're paying it price, get it fixed, get moving. Lots of contracts I delivered for them. Yeah. Okay. So that's Boeing. I like Boeing. I'm going to take a look at it because I'm a numbers person. I really am. Because you got to figure out what is the book value for Boeing? What is the value of the federal government military contracts? Okay? All right, that's Boeing. Next on the list, Bristol Myers Squibb, BMY. BMY. Ooh, another one. Okay, this company's been in business for over 100 years also. All right, 4088. 4088, the 41 is going for 65. That's a 1.5%. 1.5% is over, I think, 75% per year. Hold on a second. Let's do the numbers on this one. All right, 41 is going for 65 cents a share. 65 cents divided by 40, 88 comes to a grand total of 1.6% for the week. Multiply that by 52 weeks a year, and that is 82% for the year. I like Boeing below 30. Well, so do I. But I find Boeing with, all right, penny stacks. I'm going to look at Boeing. I'll get it out. I'm going to look at Boeing as soon as it finds its bottom. What's the bottom going to be? Well, the bottom's going to be whatever it's going to be. Okay, you and me, we're the buyers and the sellers. We buy, we sell, we create the highs and lows. We create this mess. We decide if something's too high. We decide if something's too low. When something gets down here, we say, hold on. Bristol Myers Squibb, 100-year-old company, dividend king, consistently increasing their dividends. That at $40. Oh, hell yeah, I'm buying some of that at $40. Right now it's at 40.81. Wait for the bottom. When it finds the bottom, that's when you jump in, and what happens? Then you ride it up. What does it do? It goes down, it goes up, 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 then it goes down, it goes up, down, up, down, up, down. That's all stocks do. The idea is to jump in at the right price, take the profit, jump back out. Now, when I say, hey, this is James from Dividend Stock Talk, brought to you by the 10-minute trader, that means this trading strategy should only take you 10 minutes. It's relatively simple. You take a look at your calendar, okay? Because we all know what day of the week it is. It's Wednesday. Tomorrow's Thursday, then it's Friday, so on and so forth. We all know what day of the week it is. You take a look at your calendar to find out, well, what family birthdays do we have coming up? Okay? What holidays we got coming up? We always look at, are the kids going back to school? Well, add something else to it. Dividends. When are the companies that I like going to pay the dividend? Well, look, Cardinal Health, Comcast, American Express, Cisco, General Dynamics, JP Morgan, okay, Occidental Petroleum, NEM, Halliburton, KHC, so on and so forth. Hey, LA, I haven't heard from you in a while, dude. How's it going? So you find your calendar. Who's paying this week? A Sunday. Most people spend more time planning a family barbecue than the personal finances. It's really not that difficult. This week, these 6 companies. Great. What are the 6 companies? Okay, put them in here. Great. What are they paying? Oh, this is what I can buy it for. This is what I'm going to sell it for. Great. That's over 1%. Great. What's the chart look like? Ooh, it's coming down. Oh, here's the bottom. Great. I'm waiting for it to bounce and jump back up. Okay. High of the year, 66.49. The low of the year, 39.68. That's like a, what, 80% drop? Okay, last 90 days. Check it out. 55, drops to 52, back up to 54, drops all the way down. Here's the bottom right here at 40. She goes up, pulls back 1, 2, 3, 4, 5 days in the downside. Yeah, I'm going to keep my eye on this. Where's the bottom? Once it finds the bottom, shoots back up and goes up. What did I miss? Life got a hold of me. Dude, you're young. Life is going to grab a hold of you every day. You just got to prioritize. Oh, when do you sell your stock after dividends paid? No, not necessarily so. Hakuna's over there. So is it Mikey. Hakuna, welcome. It's about time you out here, dude. I'm almost done. Okay, Simba. All depends on the numbers. What do I mean by that? Well, here's Bristol Myers Squibb. I can buy it for 40.88. I can sell it for 41, get 65 cents per share. That is close to 1.5%. Great. It meets my criteria. All right. So it meets my criteria. That's a good thing. 90 days ago, it's at 55. 3 weeks ago was the 30-day bottom. She bounced up to 43. Now she's down at 41. Okay. I'm waiting for the bottom. Once the bottom comes, the new bottom, let's take a look right there. Okay. So Here's the last 30 days. Okay, 30-day high, down, up, down, up, down. As soon as it finds its new bottom, wherever that's going to be, tomorrow, which is Thursday, Friday, great. Next week, it's coming. Whether you agree it or not, it's coming. There's going to be a new bottom. Okay? Okay, the previous bottom's at 40 bucks. Right now, we're at $40.81. Okay, a couple more days, we find the bottom. Great, she turns around, goes back up. I want to be there to take the ride to the upside. So I'm writing Bristol Myers script down for next week also. BMY. All right, we'll take a look at those next week. So you guys, it's an invitation right there. Come back next week and see if I'm right, see if I'm wrong. CDZI, really, Penny? Hey, Penny, remember I told you, you've been here for a while, so you heard me say it. I've been doing this for 20 years. If you send me a stock and I say, what the hell is that? That means I've never heard of it, which basically means it doesn't have 20 years of increased dividends, doesn't have weekly options, or there's something missing somewhere. Okay, so just for the fun of it, let's put it in. CDZI. Yeah, it's a monthly, and it's $2.96. You honestly think a $2.96 stock has increased its dividends consecutively every single year for 20 years? Seriously, that's what you're thinking? Also, that's a monthly. Okay, you've been here long enough. I've seen your name on that Rolodex long enough, so you know. Which one is that? Pepe, it's a piece of crap is what it is. Sorry, Penny, if it works for you, fine. I apologize. Seriously, I do. If you think that's a good investment for you, great, fine, dandy. It just doesn't work for me. Thoughts on BBY? Oh, I like that one. Do you think a new high will hold in unaccepted fall back down? To each their own. You're absolutely right. I come here to hear James call people. That's funny, Rocco. It's okay. It's okay. What was it? CDZI? CDZI. All right, Penny. Okay. Now, when you say it's okay, the Gordon Ramsay of stocks, that's funny. All right, it has no dividends. It has no dividends. It's at $2.95. Meaning, oh, understand what you're saying. Yeah, I get it. Okay, but ask yourself this, Penny. This is your money. You've worked for this. You inherited. You got it somehow. In what I don't know what you're doing here. Are you here to find a way to invest your money so that eventually you'll have more money safely, predictably, and consistently? Because that's what I'm here for. I'm here for safety, predictability, and consistency. And I only do that with companies that I know have historical performance behind them, which means they have done it year after year after year. And if they've done it year after year after year, more than likely they're going to continue doing it. Okay, so if I look at a company and I'm going to invest my money into it, I want to be reassured that they have what it takes in order to take my money and multiply it safely. Okay, so that company you just told me, $2.95. Yeah, it might be great to put a couple $1,000 in it, wait 20 years to see what it does. Yeah, that's not what I'm here for. I'm here for safe, predictable, consistent 1% per week. And I don't see it on that stock. I don't mean to insult you or anything, but it's your money. Shouldn't you be more interested in the safety of your money and the value in which that company is giving you? I mean, that's why I'm here, because I've been lied to for so long in my life. I found this information. I felt compelled to share it with other people. I'm not getting anything by sharing this information with you guys. All right. Very true. My bad. You're right. But Penny, I appreciate you coming in, and I really appreciate you interacting. And I don't mean to insult you in any way, but people succeed for one or two reasons: inspiration or desperation. Either I'm inspiring you to say, hey, whoever sold me this thing wasn't thinking of my best interest. Okay? Or, all right, I got to do something. I got to make sure it's safe and predictable. You can't get any more safe than a company that has 20 years or more of increased dividends. Because number one, most companies don't last 5 years. Okay, 1 out of 100 makes 10 years. 1 out of 1,000 makes 20 years. So you got a company that's made it 1 out of 1,000 and consistently increases their dividend every single year. Okay. Anyway, let's get back to our list. PSEC. I don't even know PSEC. What the heck is PSEC? PSEC. Prospect Capital. That's a no. Why is it a no? Well, it has monthly options, which means I can only do it once a month, which means 12 times a year. 12 times a year doesn't work for me. Cabo, first time here, just listening. I always get in when Calvin Hill is talking. Okay. Okay, so PSEC is a no. It's a monthly. I don't do monthlies. The numbers never work out. We already looked at AT&T IVR. IVR. That sounds familiar. Invesco, Capital, REIT. Yeah, I don't really like REITs. Let's take a look at the numbers. IVR. Okay. Yeah, this doesn't do it for me. Okay, 2009. Let's go over some of the dividends. All right. Now, I like dividend stocks because the companies share their profits. But look at this one. Okay, IVR. Starts out at $6.10 and then jumps up to $10.50. Great. Then they drop down to $7.80. Okay. And they drop down to $7.40, back up to 10 to 9 to 10 to 8 to $6.50, then to 5. Now they're at 50% where the dividend used to be. Then it drops to $4.50, then it drops to $4, $4.20, $4.55, then from $5. Look at that. 2019, it drops from $5 down to 50 cents. And then to kick you in the nuts while you're down, it drops it down to 20 cents after that. Really? Yeah. Yeah, I'm going to say no to this one. Okay, and the reason why I'm saying no, basically, I mean, they pay dividends, great, big deal, but they're dropping the dividend. Why would I want to invest my money with a company that's not profitable? What do I mean by that? Hey, Hassan Pfeffer, you like that? Like my hair loss? Yeah. Hey, I'm 60 years old. I got hair, all right? So I'm happy that I got hair at 60. My dad said I'd start losing hair at 45. Dad, you're wrong. All right. So, as I'm saying, if you're going to invest your money, why would I invest it into a company that is not continuously profitable? Yeah, they're paying dividends, but the dividends get smaller and smaller every year. Now, if I go in and look at the salaries of the key employees, if the CEO is getting taken less and less money because they're not as profitable, well, then I might reconsider. But that's never the case. All right. So there are so many other companies that continuously increase their dividends. Why would I waste my time and my money with a company that doesn't increase their dividends? The dividend is nothing more than a sharing of the profits. Okay, if the company's profitable, they're going to share the profits. That's what I want. That's what I'm here for. All right, so IVR is a no. Next on the list, Bank of America. Now, I like Bank of America because there's one on every street corner in the United States. But it's going to be a no. And the reason it's going to be a no is it's at the high of the year. Okay? Now, the $40 call strike is going for 61 cents, which is 1.5%. But if it's at the high of the year, look at all of this here. Whoever bought in October, November, December, and January, all of this is profit taking. And you know what happens if you don't take your profits? The market maker will take it away from you because stocks go up, stocks go down, stocks go up, stocks go down. They go up, down, up. Where do you think it's going next? Okay, Bank of America. UPS is next. UPS. Oh, I like where it is. 134.40. 134.40 to 135 is 165. That's over 1%. I like that number. Angel, I have moral issues with Bank of America. I know I shouldn't let that matter, but man, they burn people. Yes, they have. I'm agreeing with you 100%. I do. I don't like Bank of America either. I got a credit card with them. I prefer not to, but is what it is. Your residence. I heard that it's your mother's father that has the most impact if you have hair or not. I didn't know my mother's father, my grandfather. And my mother had 5 kids by the time she was 25. My grandfather wanted nothing to do with us. So every time we came to visit, my grandfather would disappear. Okay? And I thought that was an absolute horrible thing for him to do to his daughter and to his grandchildren. Do you have a book about this that I can buy for my sister? Hakuna, I do. I've written 13 books. And the new website should be ready sometime this week. Okay? So sometime this week, the new website will be ready. And then all my books are available. All but the last one is available on Amazon. And it's on my list to convert them to audio. Okay, so it'll be audiobooks and video. Hey, it is what it is. The way I look at it, there's no possible way my children are going to have a worse life than I had. No possible way. Okay. Well, dividend stock talk. I have 75,000. Where would you invest to get dividends? All right, Will, if you really want to know, send me your phone number. I'll give you a buzz. Yes to audiobooks. Yeah, I'm working on it. It's on the list. I get so many things to do. I probably should do it because I broke my collarbone a while ago, and I tried changing a tire on my motorhome. Now, when I say tire on a motorhome, yeah, the tire is up to my chest. It's a big sucker, big, and they're heavy. Yeah, so I really hurt myself the other day trying to push that tire around. I said, you know what? I'll wait a couple of days, a couple of weeks until I'm better. I ain't going anywhere in the motorhome for a couple of months, maybe even a year or two. But it's there and it's got to be changed because the other one's flat. So you can't let the motorhome sit on a flat tire. Okay, so anyway, back to where we were. Let's stop that. Okay, UPS. I like UPS. I'll DM you. Okay, yeah, DM me your number and I'll give you a buzz. Okay, that's what I tell people. Okay, and if you think I don't call people, just ask in the chat, does he call? And you'll be surprised how many people say, yes, he does. Because what I find surprising is that I tell you I'll call you, and only like 1 to 5 people a day will put their numbers in. I got called 3 people today. Great, had nice conversations. Talked to the boss today. Yep, me and Mike talked today. Mike's going to let me use one of his planes. Mike's got 6 planes sitting, being unused. So whoever else is a pilot here that wants to use a plane, Mike's in Jacksonville. He says, come on down and take my planes out for a ride. No, just kidding. Oh, that's cool. All right, anyway, let's get back to where we were. So I like UPS. I do. Mike, that's funny. You know what? Mike, I'm debating if and when cause I'm thinking I'm heading up to Maine for July, August, September, because it's nice up there this time of year. I'm thinking heading up there. Do I want to go I-75 or do I want to go 95? I don't know. Because I got a solar electric bass boat. No, I'm not taking the motorhome. Because I bought the motorhome. I bought the motorhome so my ex-wife can stay at my mother's house. Because my mother has this house. And because I'm basically down here taking care of my mother's estate and a few other things. I'm trying to get my life in order. I'm 60 years old, trying to get my life in order. I want to figure out what I want to be when I grow up. So anyway, yeah, I bought the motorhome so my ex-wife has a place to stay on the property because they really can't live together because my mother is, and then my ex-wife is. So she takes care of old people, so she's going to be there, and then my kids are going to stay there also. So I want to make sure I get a nice motorhome for them to stay in, so that way they can stay on the property and they don't have to be in the house. That makes sense? House of Pfeffer, yeah, I'm thinking 75. Going up through upstate New York, that'd be fun. Anyway, it's just a thought. I'm not 100% sure because there's a lot of interesting things going on in my life right now that I wasn't expecting. Nice things, always good. My mother's father was bald. I got it from him. You talking about my mom and wife? You talking about my mom and wife? No, 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 no. I'm talking about my mother and my ex-wife, my children's mother. Okay, my children's mother left me in '03. We've been divorced for a hell of a long time. She's super nice. She's a great ex-wife. We can't be in the same place for that long because we get on each other's nerves. Anyway, but still, I'm trying to set a good example for my children. She's still the mother of my children. So, in order to take care of my mother, I'm buying a motor home to put in my mother's yard so the ex-wife can stay there and my children can stay in the motorhome when they're keeping an eye on my mother. Because my mother's in her 80s. Okay, she refuses to leave. It's her house; she can stay there if she wants. Okay, she's perfectly capable of doing all her own stuff, so fine. All right, so let's get back to let's stay on target, okay? UPS. Don't twist the words. It's crazy. Yeah. Yep. Okay. All right. Let's get back to the topic at hand. Buying good quality companies so that we can get a consistent, predictable return. And this is where Second Chance Hassenpfeffer comes in. All righty, 134.40 is what I can buy it for first thing tomorrow morning. It is UPS. Question number one, always. Do I like UPS? Do I know what they do? Do I mind holding it? Would I like to buy it? Would I like to own it at 134? Well, take a look. The high of the year is 189. The low of the year is 134. She's near the low of the year. You can't get any lower. How do you make money in the stock market? You buy low, you sell high. It's actually which books would you advise to start with? I always start with number one. Number one basically goes through the basics of dividend capture. Okay, dividend capture is like 400-year-old trading strategy. Stock market's been around since 1602. It ain't going anywhere. Okay, the very first company that offered dividends was the VOC, which is the Dutch East India Shipping Company. The only way they can do that shipping companies, can you imagine that? They knock door to door.